Hello guys, let's look at the performance of the market during the week as well as what to expect going into next week. Make sure you watch this video to the end because at the end of the video I'm going to share with you a secret good execution strategy which I've been using over the years and it is working perfectly. So on gold, we start from the weekly time frame and more importantly we want to look at the weekly candle close. But before that, let's look at this level here, right here. We can clearly see that the market has been rejecting this level. Anytime it comes there, we have several rejections. So clearly it shows that it is a level of interest. Market has given us some huge rejections whenever it comes to that level. Now at the same level, we have this psychological price right here, which is 1,800. And that explains the reason why this level is very key on gold. So this week we had the market coming all the way into this key level and the weekly candle close doji. I think this is a dragonfly doji. If you don't know what a doji is, you can just Google it. All right, you can just Google it, doji candle. So these are all doji candles, and the one we are looking at is this one, which is the dragonfly. You don't really have to know the names of all these things. A doji basically represents an indecision in the market. So here, this weekly candle close means that there is an indecision right around this level. Okay, indecision means that the market doesn't know what to do next. Okay, it can either continue the upside or reverses from this level. But mostly when market is going in a particular direction and you have an indecision, it is most likely that it is going to reverse to the opposite side, and that is what I'm expecting on gold. I expect that the market reverse to the downside on gold. So yes, that's the information the weekly chart is giving us. Let's go down to the daily chart. Now on the daily, we can see the market is trending up, creating this higher high, higher low, and a higher high. This was the last higher low. So this is a clear formation of an uptrend. For the market to continue the uptrend, needs to break above this high, okay? Meaning that this key level we have here needs to be broken. But it's not going to be easy. The market is actually struggling inside this zone. So we have to wait until next week and see what happens. But before that, we can clearly see on the daily that the market is creating kind of a divergence. Look at this level. Now here, when you mark this level to this level, this is a clear higher high being created. But on the RSI, the market created a lower high like this one. So this is a perfect bearish divergence on gold, and a bearish divergence means that the market is likely to sink. So on the weekly as well as the daily, we are having some indication of sales in the market. Now let's go down on the 4 hour. I think I have to clear everything first, but I will still mark the key level, which is the 1,800. Right there. Now on the 4 hour, let's start from here. You can clearly see that the market tried to form kind of a W pattern here. So we needed a pullback right here so that the market could continue the upside, but it failed. And mostly when a W or M pattern fails, the market comes back to retest this level. So let me draw it for you to see. This is a failed W pattern. Mostly the market comes to test this level here like this, then it drops. So that's the same thing we are having on gold. This was the W and this is the level we needed to test. So let me mark that level here, right here, exactly. So yes, we have this level. At the same level, we have the 1,800 psychological level. And if we use our FIB, measure from this point, this high, all the way to this low, and we extend the FIB to our right hand side, we can see that the FIB is in line with the psychological price at the same level where we are supposed to test. That is a failed W pattern. So everything is giving us the indication that the market is likely to reverse here. This is what we call confluence. All right. If you don't know about confluence, then now you know. So I wouldn't be surprised if market starts pushing down from this level. And if we are going down, then where exactly are we going? Okay, the first level that we can target, okay, is around this level, which is a demand zone on the daily, and we also have the FIP extension right inside this zone. The next zone that we can target will be around this low, where the market needs to break completely if we want to start a heavy downtrend. So this will be my target levels, which is about 400, 600 pips down. That's a lot of pips on gold. So yes, my targets will be this and that. Those are the targets that I will be looking forward to on gold going into next week. From here, I'll go down to the 1 hour so I can share with you the secret execution strategy on gold. So now that we know the direction we are going on gold, how do you execute? Let me clean everything so that we have a very clean chart. Now, the easiest way to execute a sell on gold is for you to wait for market to create a down base down and make a pullback. And when the pullback comes, that is when you can execute. But that's not what I want to even share with you. Just that you want to know, once the market has created this down base, it needs to go down a little bit and start making a pullback before we execute a sell on gold. So when the pullback is coming, where do you execute? Let me show you an example of the signal that I sent in the group. Now, anytime market creates this down base down and it makes a pullback, now you have to know that the distance, mostly the distance between this price here, the highest price here, and where you are going to execute on gold is mostly 15 pips using the 1 hour and the 15 minutes chart. 1 hour and the 15 minutes chart. So the distance is mostly 15 pips. I got to know about this from experience. The distance from the high to the lower high mostly is about 15 pips. So now let's do this. Now let's do 1 or 2 examples so that you understand what I am talking about. Here we have markets creating an up, a base, and an up. Okay, and it's making a pullback. So the distance from here to this should be giving us about 15 pips. So this is how you do it. You mark the lowest price here, like this. Okay, then you check the price. This is 1787.7. So plus 15 pips on gold. So 1787 plus 1.5. That is 15 pips. So we have 1789.2. 1789.2 exactly. And do you see how perfect market came to tap this level? Okay, and it went all the way up. Well, you still don't believe it. Okay, let's take this example. The market created this up, down, up, and it's making a pullback, right? Now, let's do our 15 pips. From this level here, the price is 1788.9. So 1788.9 plus 1.5, that is 15 pips. So we have 1790.4. Now the price we will use is 1790.4. Guys, do you see the accuracy? The market came to tap exactly on the 1789.4, exactly there, and it reversed all the way up. I know there are still some people who have their own doubts. Now let's do for the sell. Let's do for the sell here. So I'll do this one and let you guys go and practice on your own. And as I said, this is from experience. The amount of pips on a particular pair depends on the volatility of the pair. So it is 15 pips for gold, but for the other pairs, they are different. Okay, GBP USD, GBP JPY, NASDAQ, they are all different. So if you want to learn more, just make sure you join our free Telegram and also make sure you participate in our live sessions. Alternatively, you can also apply for our one-on-one mentorship where we take our time and take you through how we came about these figures on all the different pairs that we have. So let's do for this. Let's mark the high right here. Okay, the price there is the 1788.1, right? 1788.1. Because we are selling, we have to reduce it by 15 pips. So minus 1.5. That is 1786.6. So that is the price we want to execute. 1786.6. Guys, don't you just love the accuracy? Don't you just love the accuracy? Look at where the market came to tap before going down. Okay, so yes, you can practice on your own, like just practice. There are some of you who may not still believe it. It's just up to you. Let's do for this level. From here, that was the low here. Okay, and how many pips? We are doing 15 pips, so the price there is 1.66.7 plus 15 pips. If you are executing a buy, you add. If it is a sell, you subtract. So 1766.7 plus 1.5, that is 1768.2. 1768.2. Boom. And look at where the market came to tap. Okay, and went all the way up. All right, it went all the way up. What you can do for all these ones, and you should be able to get all of them. Now let's do for this. Let's do for this one. This right here, up, this up, and market came down. Now if you do that one, you should be able to get it. So from here, what's the price? This is 1768.7. 68.7 plus 1.5, that will give you 1770.2. So that's our execution, 70.2, and boom, look at the execution, guys. Look at how accurate you are. I believe you are surprised, right? Yes, this is pure experience that I want to share with you, and that's a secret I want to share with you. So you can go and practice this one. Make sure you master it. It is specifically for gold on the 1 hour or the 15 minutes time frame. You have to get the time frame very right. 1 hour or the 15 minutes time frame. So yes, just practice. Make sure you master it. Like I said, if you need any help, make sure you join our Telegram, or you can as well apply for the one-on-one mentorship, and we will gladly assist you, guide you on how to go about this and the other strategies that we trade. Thank you so much for watching. See you in our next video. Peace out.